First of all, I'd like to say there is a hidden cost and hassle and inconvenience of not having shared service centers and doing things decentralized, traditional way, but you don't see it. And when you have a quasi third party like a properly set up shared service center and even a proper third party like a TMF, then you start seeing it because you start being charged for it. And then you have to decide either you fix your evil ways or you pay for them. But there is one case that I have in mind of a client, accounting client, who kept changing their minds at closing time about this journal entry and that journal entry and this presentation, that presentation, and that was not part of our contract. Therefore, there was no way that we would be bending backward and absorbing that overcost and that overwork all the time. And at one point in time, they decided that it was the way they wanted to do it. They didn't want to pay us for doing it. Therefore, they took it back to do it themselves. They still have the cost, they still have the pain, they still have the change, but they don't see it, or not as much as they should. The beauty of having a third party like us is that we have our installed capability. Therefore, it's pretty much a turnkey. You do not have to do much of a design, you do not have to do much of implementation, and you do not have to install, to recruit people, to get premises, because we do have that, and we do have that worldwide. And you do have access, as I mentioned, to our shared service network through our local offices.
Yeah, I think the guys have talked a lot about shared service operations. I just pick up on the implementation. I think that's where a lot of people get it wrong. I think people underestimate the amount of time and effort it takes to actually do a proper design. So whether that's expenses, bringing people together, seconding people out of the business, external support, I think that's one. I think people underestimate backfill. So on the one hand, you talk about this is very important to the organization. I want to dedicate a number of people to focus on this, and then you expect them to do the day job. And the reality is you have to backfill. You can do so at a more junior level, but you have to backfill. The third one is redundancy. I think a lot of people start off with the right intent around a business case, and if you're going to take jobs out in countries and you want to make a saving, you have to take people out. You can't move people around and move them into other functions. And if you're going to do that, you have to be clear about the regulations in the country, and some jurisdictions in this region are punishing when it comes to managing people out of the business. But the other one as well is just what's right for the company. So you set your organizational brand by how you treat people during a shared services consolidation outsourcing process. So I think those would probably be the three that would really resonate with me.
Well, the SLAs have changed a bit over the years, but what we try and do is keep it as transparent as possible to our customers, which is the rest of Brocade's employees. So the one thing I request of my team is that to remember that we're in the services business, we're delivering a service, and the customers are global. So we have some technology that allows them to contact us. I do monitor it every day, and if I spot something that looks like it might need my attention, I dive in. And it's like, look, I see this is happening. I see the team's working on it. It looks like it's a little slow. What can I do? So I'm encouraging the team, which is relatively young, to be more proactive with the employees around the world. And it reemphasizes that, the shared services concept being in Singapore is important. And that seems to be working.
I was just going to say, I think for me, it's governments will change legislation. It happens. It affects everything in the business. It's not just shared services. So if I look at, is it a problem for shared services, you should think of shared services as no different to other parts of your organization, whether it's R&D, whether it's manufacturing, whatever you're trying to recharge, the legislation that changes will affect you. It becomes a problem for shared services if you don't think and plan and talk to your tax people up front. So for heaven's sakes, talk to your tax guys. If you get it right and set up and you talk to the tax people, you're using the right kind of entity, you agree the cost plus, that's fine. It's not a problem. You then need to be wary of and in the loop with government changes that happen. But I'd suggest they affect your whole business rather than just shared services.
So is this a serious enough issue to actually cause you to relocate your SSC or somewhere else?
For me, no. I don't think it's a material issue. I think it's the cost of doing business. And you have to then reflect it back into your charges. But you have to make a decision at the point when you set up. I wouldn't then, stop doing shared services because the government add a bigger markup. I just think it's the cost of doing business.
It's probably better if you set it up in a stable market where you know rules will not be changed when the next government comes in and things like that.
I can see John about to
Okay.
advocate Singapore.
Honestly, we've seen the whole cost-plus thing has been under attack for a number of years.
Okay.
And it got worse as governments started realizing their tax revenues were dropping. So the easiest place to go get money is from big companies.
Yes.
So that's what we're seeing. I was audited 3 times in Japan and within 3 years. They told me we were going to do that. We just finished our last one. They said, no, we won't see you again for 5 years. But it was all about raising some revenue. And in India, it's about raising revenue. And in China, it will be about raising revenue. Things are going to get tight up there, and you can bet they're going to be after us for this. And basically, companies have to realize that they've made a killing on the cost-plus deal. I mean, what's everybody charging? 3%, 5%, 6%? You know, versus the pass-through to the corporate coffers of the revenue. And these guys aren't stupid. They say, hey, why should I take 5% of $500,000 worth of cost when I can get 30% of $10 million of revenue? So this is just something we're going to have to deal with.
Yeah, I think for this generation of CFOs who have grown up in a traditional finance organization where you move around, you get different experience, it's all in the same location, and that gives you the right skills to grow up into being a CFO. I think it's pretty tough to move to a new model where a big chunk of your organization moves offshore, becomes somebody else's, and you become a customer of that. I think logically, everybody gets it. I think emotionally, a lot of people equate span of control and headcount with importance, and so suddenly you're less important because you have fewer people. I see that quite a lot with people, and I think that's just a generational change. And so the CFOs in the future, I think, will take that as a given.
Okay.
However, the interesting thing is, how does the CFO of the future get all the experience they need to become a CFO if half of it is offshore?
Yeah.
So I think that's there's a different problem coming, which is where do you find the next CFO? And your career paths get more complicated, and you have to look at more mobility. You have to give people that transactional experience, and you can't go and buy it from the market, which is what everybody's trying to do now, is trying to find a CFO who's got all the experience. It's I'm not going to say a dying breed, but a lot of organizations have made this shift, and you've got to tackle it internally. You've got to look at your talent paths and how you're going to build people.
Thank you so much for your panel. It was really, really interesting. Fantastic.